morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
Pretty solid. Still kind of close to the vest in that I just am mostly trading stuff I know really well that's near a pivot, and there aren't a whole lot of them. I mean, so many have just sort of left the snow and MDB and all them. So I still I get on MSTR quite a bit. Just still on some earning setups and stuff like that. But yeah, I mean, a lot of it. I mean, one thing that can happen, like Duolingo this week. I mean, honestly, like flow was decent, but the narrative was just out there that you know Apple killed them with the live translation thing,
Yeah.
and I just, even though it during the Apple event it dropped, it popped right back up, and I just think that's a misunderstanding of what Duolingo even is. Duolingo is not about live translation; it's about you know kind of screwing around on the app and learning a language or whatever. Its fundamentals are already, way overshot and all that. But anyway, it's why it fit my thesis. Like if it's hated on Twitter and it kind of reaches that threshold, it can be a decent move. And it popped up like 15% in 3 days. Um, so that was kind of a one off. But in general, staying on solar and MSTR, LLY, things like that. And then, I mean, really, I think we nailed this a long time ago that smalls are kind of where you want to be, park and wait. A lot of those have continued to do pretty well, but a lot more selling than buying for me in those names.
It's funny you mentioned that. Main note. Usually I just have a couple names wrote down, but the main note on the review last week is just something I really realized that I think is better than just listing some random names. But the way I'm preserving capital right now is in those smalls as you talk about, or and there's some $20 $30 stocks I like too. Again, just because the 100 shares kind of works on the price for me. A
Yeah,
little different when you get to the 8 to the 9. Um, so I like those plays, and the park and wait's been working. I mean, obviously for me, Open was active this week, but even sitting in the Bitcoin name that I believed in, Hive, and taking your percent, SOC Clove. Um, I didn't buy any at 816, but man, I wish I would have with AG. I still have some, but I don't have. I didn't get more when you had the reread. But man,
yeah,
shout out to AG. If you ever watch this show, Jesus, you know the name. And
yeah.
then and then yeah, like saying crappy ones, MPWs, back from that thesis even. Just good the TA's been good for me lately, P. I mean the the flow kind of shows the follow through. I mean, that's why you get a lot of this already moved from me. But the TA buys have just been amazing. Maybe the last month and a half or since I've been back from vacation.
Yeah, and even if I mean, there's a lot of vocabulary to describe what some of these are doing, but I like the term clean. That I use it for options, and when it also matches up with a zone in the TA where there just isn't much there, even if it's
Mm-hmm.
just a retrace, and you can call it a gap fill or whatever you want to, but where there just isn't a lot of disruption there.
Yep.
And usually with those, I'm not even trying. If I say something's clean and it's 30% above, I'm not even just going to try to hold that whole zone. But, to me, if it's clean 30% above, I'm going to get 10. I'm going to get 12 or 15 or, whatever. And a lot of those, depending on the expiration, you can kind of zero in that it's going to happen probably in the next 3 weeks or something. And if you can just be patient enough, something for a week or two or three, um, the move can happen pretty fast from there, and you're out and on to the next. So that has kind of been the story of my year. I, I had last year was more like you know kind of compounding some pretty massive sustained winners like MSTR and a couple others. But a lot more smalls this year, a lot more um, quick hitters, or park and wait, take your 15%, that kind of thing. So it's you have to stay on them. You have to have a plan of what you think they're going to do when you go into it. You have to have a plan for red days too, but overall that worked. Zooming out a bit on the charts and just waiting has been what I worked on this year for the most part.
Yeah, definitely. I just kind of bump on the channel, like moving through that zone. I mean, that's kind of the origin of why we went that way, or I started going that way. I mean, if you notice, most of my lines starting around 22 on charts that I got from you, and it was because we were trying to find a zone that we could trade, and that fast movement
Yeah,
is what we were looking for. Is you know, you used to say I'm a day trader. We got you off of that nonsense, but um, um, we're active traders. We're here every day, 100%.
yeah,
But just yeah, finding that zone, and really what I it was always enough room for me. I always felt like options needed more room than the move needed to be more for the option side, which turned out in some cases yes, some cases no. Um,
yeah,
but it's the reads at the levels that turned out to be most important for me, not even to trade through the zone, because I mean you just see the flow sees support and resistance at those two key levels so well. And I mean, we just talked about AG. I mean, I'll bring that chart up. If you look at that, the flow was first, and then it came back again when we got to the $8, and it consolidated there for a month. But everything that from your side still said, you know, this is going to continue, and son of a bitch.
yeah,
And that's I mean, I'm glad that what you just said. I'm over here proud and happy, smiling, because it is about the long con, so to speak. It's not
yeah,
about. It's very the only way people. You're not taking 5 grand and taking $500 out every month. You're eventually gonna fuck that up, and I know a lot of
yeah,
that's what Twitter does. But you can take 50K and take out 1,500 a month, no problem. Trust me. No,
yeah,
that's a bad month. That's a bad month, and do
right,
this. But you have to have the long game of it. And for the people out there listening, you're probably not going to do that with options either. But you have to play the long game. You have to have that thesis, and that's why we do mention it 20 times in this session, and probably text thesis probably 20 times back and forth a week, because it's so important to the overall move. So um, yeah,
yeah.
yeah. There's more than one way to skin a cat, but there's only one way to get most of the meat off the cat, and you got to stick around.
Uh, right, yeah. Going heavy in options with that method, and I'm not talking about zero DTE stuff, but like
Hmm.
swing trading options is as your main thing, um, is
Oh
very
God.
difficult because you basically it's very hard to control the losses, and it's hard to control your emotions on the win. So
Yeah.
you sell too quickly and you hold too long on the losers because you're this illusion of having time. So it's very difficult to do that. Now you can enhance a trade with options in all kinds of ways. It just has to be a small thing of a smaller percentage of it, and the percentage of it for me has gotten smaller. Because I basically like I size up the whole trade and keep the option position the same. So whereas it was 30% of it, it's like 15, and then part of that's a hedge, and so there's lots of ways, and there's no perfect setup for that, and it depends on the stock. Johnson and Johnson is different than Coin.
Sure.
That goes without saying, but it has like really profound impacts on option pricing. And I'm going to reshare a video about the origin of option pricing by this scientist. So I like it because it's not just some you know Twitter trader tutorial. It's talking about kind of the math behind it, and in a way that's kind of accessible, but it really is a good refresher. It kind of keeps your mind on what exactly it is you're buying, these derivatives, and it's you want to keep it simple, You buy a share of something, and it's very easy to explain what a share is to somebody. It's not easy to explain what an option is, and that should tell you something about which one you should trade more heavily. That's the easiest way I can say it. If you can explain it simply, it's a better thing to be in overall.
No, 100%. I mean, you're preaching to the choir over here, and I
Yeah.
mean to be not to be critical or anything, but I still think you're on your journey to perfecting when to use options instead of depending on them.
Yeah, sure.
Unless you like to gamble, which we have that too. But
Well,
uh,
I mean, I think like for me, the ER casino has been great because it's a way to isolate that experience. I like doing that. It works well. It's self funded, so so that's been great. And I just I peel some off of it. I don't just put it all keep putting it all back in. The base account of it stays the same for what I actually do with it.
that's
So
important.
that's that's been it for me. And a couple times a month to get an 800% or 1,000% in there is fun. Not gonna lie on that. It's a I really enjoy that, but it's not like you're trying to do that every day, and because you can't. I mean, it's just not gonna happen. I mean the how many days this week with Spy and QQQ was really the better part of the move pre market,
Oh yeah,
and
sure.
then it's just sort of dancing around,
Yeah,
and you know yes, zero DTE you can get 30-40%
69.
in there,
What's up, Goose?
but but it just goes the other way on you so fast, and Theta eats it up every second of the day. So no, that's not fun to me. But yeah, I like the casino a little bit.
Oh, sorry, it was 61.59%. That's
Oh,
what it
okay.
was this week for Goose. God. Duh. When you trade to a percent, you're evil. um, yeah, I had one note, and it kind of fits here, and get a little transition, but um, social media post versus DCA. Why can't I figured out the answer, and I assume it's just the funding part, but how can I can't wrap my head around these kids or younger people that are passionate about trading. They can post 1,000 times, a week or whatever you need to do to get the interaction, but
Yeah.
they can't DCA.
Right.
It's the same thing.
Yeah.
Except for, well, I guess one doesn't get you instant gratification, but it will give you gratification over time. I promise. You'll have a way bigger wood. Um,
Yeah.
is that again all just on the wrong psychology for trading, or I mean, like, because
Well, I think
I
it's
enjoy the DCA. Like for me, it's like going to the store. Like my Fred Meyer receipts, I always post when I like, look, I got this 50% off. It's the same
yeah.
thing to me. It's a DCA is the same thing to me. It's like, oh, look what I got on sale today. And then
Well, I mean, your car insurance is cheaper than theirs for a reason. I mean, that's one part of it. Um, and I think it's that like social media and their view of trading, it's that dopamine hit that you're not going to get from something that's going to pay off months from now or even weeks from now. It's got to be right now. And they want that that crooked green number today based on their shot call. And so that's what they're all about. And it's why some of them go bearish when we're grinding up like this because because things grind up slowly. So they want the violent move, and so to them, there's plenty of confirmation bias on there about why it's going to happen, and so they're just going to shot call puts over and over and over again, and it has not worked. I think so many of them. When we did get the good pullback, they were pretty much broke by then anyway, so they didn't have enough to put into it. So they missed the move down, and it just kind of resets again. So it's a very hard way to trade and whatever. Best case scenario, those guys, if they're good at social media, they're losing subscriber money, they're not losing their money.
Sure.
That's kind of the best case for a lot of those guys to
Sure.
me.
Well, I guess if you're red on your trade and you get a bunch of likes, that still fills the gratification bar for you.
Yeah, and it might even fill the whatever engagement dollars that they get. So yeah, I mean, it's like Reddit where people post their huge losses. They're proud of their huge losses. They get praise for their transparency about their huge losses. So it doesn't always seem like it's even about winning and losing. It's just about the notoriety and clout. And they to get clout from losing. I don't know. I'm a different generation, I guess. I just don't get that.
100%. Oh, just a good mental space for most people. I mean, me and you've been through several market turns and pullbacks, and you've never heard me turn bearish. I mean, even when we started, it's just not in my head, and I've always looked at it. I'm trying. I mean, I'm trying to keep my head above water. So when there's a little dip, I just got to figure out how to manage that so I don't go under, and then
Yeah.
continue to swim when the current's going my way. So yeah, I don't understand, and that's hard. It's hard to flip flop. I mean, even the way you would research, right? I'm looking for good companies and good news. Now I'm looking for bad companies and bad news. I mean, that just doesn't make no sense.
Yeah. Right. It's and I think I talked last week about how I could flip like my filters are set up to be bullish,
Yes.
right?
Yeah.
And it doesn't mean I'm just looking for confirmation bias or anything like that. I mean, they're set up in such a way where the cream rises to the top, and the setups I want to see are going to be the ones that are most visible. I could tinker with that and make that thing bearish, but there's just not going to be as much there. And a lot of what is there is going to be whales hedging or whales, gambling that something's overextended. Problem with overextended things is that they do pull back, they regroup, and then they go right back up. And that's been what's happening with a lot of them for an extended period now. So it's I mean you have your outliers like Lulu on the way down, Enphase on the way down. Some of them that had a sustained downtrend and they haven't been able to break out of it. But that's comparatively rare. Your McDonald's of the world, or McDonald's will get you know E. coli outbreak, 12 people die, and a month later it's right back at all time high. So that's just been the story. So it's very hard to set up what I do in a bearish formulation, and I just it's not really worth the time to me.
Yeah. I just watch level two. I mean, I stare at screens 4, 5, 6 hours a day, and I just watch a
Yeah,
lot of level two, and I do. I mean, it's right here in the corner. I mean, I don't hide shit from anybody, but I filter my level two, and so I can see bigger orders instead of just the matrix. And um, it's been a weird grind up, to say the least, in level two, and I don't want to get in my reasonings behind it because I don't want to be conspiratorial in any regard, but there hasn't been large sell orders or large positions moved out of in a lot of anything for a while that didn't really have a reason. Like, it's the whole market is just kind of, it looks like there's buyers or people that just need shares for whatever the reason may be, and it's very odd to me. And then you couple that with urine, there's no top, which is also very odd to me. It's just you take advantage of it until something changes, and I assume you'll see things first, but um, yeah, the overall market, you just have to kind of play the trend. That's where I was going with that.
yeah, I think so. The last two decent sustained pullbacks, I would see it in SQQQ first, and within a week or so, what happened. But our little spy segments here have been very short because I'm like I don't have much for you. I have this one, but there's no companion to this put, so I can't really say much about just the uptrend stopping, and then and then it hasn't. So it's not like I'm not looking for the right stuff. It's
No.
just not there.
Yeah.
So until it is, we just continue what
I
we're
mean,
doing, I
if
think.
you look at my weekly, my money flow pretty much for the whole, I mean, it's been almost 2 years. It just hasn't really, it tried to go red on outflow on orders, but it's basically an inflow outflow. Read this green
So
down here. And it's been almost 2 years and it's just gotten progressively worse. Like
so
with lack of selling, I mean, progressively worse.
yes, yeah, right. And where are the sellers question, I think,
No.
is important,
I'll
right?
say it. I will say it to you. I guess I'll put it out there. You know what I really think it is? They went to
What's
T1.
that?
They changed the T1 T2 rules, and they're really trying to get like the naked shorts, the manipulation out. You know, they really are in general like wanting to pull it back some, um,
Yeah,
and and they do need some shares.
right. No, I like that. I like that explanation.
They do
Would
need some
you
shares.
we are going to keep this short, so I'll try to keep this short. But bear with me while I expand the oxen analogy for a
Oh,
second.
by all means, sir,
Uh,
go.
okay, so where this came from was that I, as part of my grad school dissertation stuff, I ended up studying a lot of church land grants. So the church is given property, and they basically ran it like they ran these estates as economic, just machines of just producing crops and selling it and all that. So it's an early kind of capitalism. It's like sort of transition from feudalism. But anyway, if you look at actually the map of those properties they had in the fields were very long, and they were long and narrow, and just blocks of those. And the reason for that was practical. When you're using oxen to plow a field, it's a real bitch to get them to turn around. So you'd rather just have them go in one direction, and you stay in that direction until you absolutely have to turn around. And so we use that to talk about the market and the reasons why the market is going to continue to go up. And it's been a useful analogy for us. Well, I'm going to take us to the Renaissance for a minute. One of the reasons that, if you look at in Florence or Rome or all these places, a key aspect of the Renaissance was they started to build big, grand stone structures like the Romans did. But they didn't know exactly how the Romans built all that stuff. So they had to come up with their own innovations, new recipes for concrete and shit like that. And one of the ways that they lifted really large pieces of stone was with pulleys and oxen. Well, you got to take things up, you got to take things down. Brunelleschi, I won't go into who he is, but like he was a big Renaissance guy around the time of Michelangelo and all that. He invented a reversible gear to where you could always have the oxen go in the same direction, and you could lift it up and you could lift it down, no matter what you wanted to do. So my analogy here, long story short, is that whatever it is that they want to do to quote manipulate the market and engineer pullbacks and all of that, they are going to do that while the indices continue to just sort of grind up. So they're gonna target sectors and certain like groups of stocks. They're gonna have a really bad week. They're gonna get the news headline they want. They're gonna flip the algos, and the things that are gonna seem like a disaster are gonna get a lot of people to pile in short, and then they're gonna take it right back up. And that's what happened in April. And I think we're gonna get another event like that, or series of events. But you have to keep your eye on the prize and understand what it is that they're doing. There's the stock market, the basically its role in society or role in our economic system is simply too crucial that they are not going to just let it crash and stay down for years. I've ruled that out as a possibility, and so I trade around that idea. You protect your neck, but I think that they'll just continue moving in the same direction and manipulate the gears and pull things back and just take it right back up. that's my broader read on the market as far as the oxen thing goes.
Yeah, I'm glad you added that last part because I ain't had shit to add to that first part. Um, you definitely should do that more often though, because have you ever heard me talk? Jesus Christ. Um, Definitely not the same backgrounds here by any means.
Yeah.
So I like it. I like it when you add a little bit of that to it, so people just don't
Yeah.
think, God, it's just some loud guy yelling. Um, but again, I'm glad you added the last part to that because I can add on that pullback. Which I mean, the first thing right when you went there, I was like, yeah, is it this week with the rates? Do we get that little bit of a pullback? And I think we both agree. The We both kind of know gonna know where it's going. Like and subscribe. Follow us for more.
Yeah.
I mean, it's just is it just how it works. It's not that hard. We don't overcomplicate things. But what really hit home with me there, and I think everyone should have in their mind, with just to kind of touch on it as well, is if you think apple fucking pie and American flag and country music are American or representation, the number one representation of America is Wall Street, is the market. It
Yeah.
shows our wealth. It's like driving
Yep.
a new car through the fucking neighborhood. And that it ain't going. What Professor said is 100% right. There's no way it go. I mean, the political aspect of that, you would just get fucking. Your party would no longer exist. If Spy just went back to the 430, you probably couldn't win an office on a federal
Yeah.
level. I mean, if you were in charge when that happened on your watch, you could not. Your party would have trouble. We'd have a new party. Yeah, a new party would come out of it called the "Give Me My Fucking Money Back" party or some shit like that. Because
Yeah.
I mean, it would just put such a kink in the system. So um, it's designed to go up, as you used to say.
Yeah. And I mean they will throw Main Street off the cliff to keep Wall Street
Yeah,
moving, and not even necessarily intentionally so, but the legislative environment, they've shown this so many times that they'll do things to protect
they bail out,
banks, Wall
bail
Street.
out.
Yeah, exactly. So you can either, like, I agree with the Occupy Wall Street people, but I still would like rather not be down on the street with them. Um, I'd rather. I mean, I wouldn't be up in those offices either, but I want to do something about it, right? And so what you do is you get a piece of it. I mean, that's always been my take on it. It's like I'm not just gonna, see all of this happening and say like and get my placard out and bitch about it. I'd rather just dream because it's the best way to do it. It is. I mean, I don't know. Owning assets is the best way to beat inflation and to just keep your head above water and not need the third and fourth job and all
Stored
that stuff.
value, stored value.
Right. I mean, that's how I got into this. I was sick of just grading papers for my classes and then, grading essays outside of there for a few extra dollars. I mean, it wears you down. So yeah. Anyway, so that was the origin of me even wanting to get into this. But out of that, you can see the links they will go to protect Wall Street, and just by extension, it's why semiconductors have been and continue to be such a great space because it's treated like a national security issue, like
Yes.
nuclear secrets or something. Like they're going to protect those assets and those companies, and you can get a piece of that. So we continue to work towards that.
Yeah, no, that's why the '08 bailout was so big. I mean, I guess it's probably better to say a smaller one to just kind of use the example, but just even in like if a bunch of people lose their jobs, a bunch of 401k money stops flooding into the market as well. It's a
Yeah,
bank, and that's not good for anybody, and they just can't. They got to keep the system rolling. Um,
yeah, that passive investing. I mean, that
yeah,
has to that
yeah.
that that faucet has to keep running. It just
That's
changes you
why
so
that's
much.
why they say we need strong jobs. Like that's how the link to jobs really comes. Like if we got a great job, low unemployment, and we're gaining jobs, that's why the market is so strong in that environment. Is because
Yeah,
it's like, hey, we're going to continue to get money from everybody. We're only not getting money from 3% of the people or whatever.
Yeah,
And
I mean it's why
I was talking to my
Apple's.
Amazon
Oh, go ahead.
buddy.
Yeah,
I was talking to my Amazon buddy, and he's not nothing special. Like maybe it's maybe a 12-year employee, but he's not like a manager or anything. And he was like, I put in because we were talking Fubo, and he was like, I put in 36K over the last like 18 months from his 401k from just his normal deposits. I was like, yeah, damn, you know what I mean? And he's done well on that. Like that's now like 124, he said, but like that's just a ridiculous amount for a single person.
yeah. I was talking with a friend of mine who he's really like just sort of like invest in the S&P and that's it, but he likes to talk about companies and stuff. So I was talking about app loving,
Yeah.
and the move it's made and all that, and he's like that company kind of sounds like bullshit, and I'm like, well, guess what, you're buying it now because it's in the S&P 500. So like it's it's why that S&P inclusion gives stocks such a boost, because it's just they have to buy,
Yep.
they have to get shares of it,
It's not.
whatever the
It's a
price is.
lot of days. It's not just one day. That's a lot of
Oh yeah,
days
yeah,
because there's
yeah,
funds that
exactly.
have to have what they have in it or mirror them to
Yeah,
some extent.
right, right.
Yeah, so always a big lift. And if you're new to trading, that's one of the easiest plays there is. S&P 500 edition. And the
Oh
better
yeah,
the company, I mean, Tesla was one of the best, but the better the company or the more around it. Like if they added Carvana, I'd get a little bit of that.
yeah,
Because
yeah,
it
sure.
is what it is. It's just going to continue.
Yep.
Um, got anything else on notes, or you want to get some boring stuff here?
Let's get some boring stuff so we can hit our
All
time
right,
mark here.
go over to your screen.
All right, so gold and silver, I don't have a lot to add here. I mean, I just the thesis is playing out, and off we go. I don't have a ceiling. I just think it consolidates, continues to grind up. Where I mean, I may have thrown a like 42 to 45 number out on silver a long time ago. We're in that zone now, so yeah, so we'll see. I limited opportunities in here. Just kind of maintain and keep what you have and enjoy. I guess
I know
the
I know what to search for gold and silver in the group
yeah,
to where I can go back. I think I'm gonna go back to that voice session where I was like, let me write that down. I was kind of laughing at you for the 30. I think it was 32. Might have been 34, but it was a
yeah.
stupid price on that, and I was like, I'll write this down. So because I ain't got nothing to add here, but so if you're new to the place, I'm gonna go screen cap the December video, and it'll be here next week. Come join us for that.
Yeah. The some people are writing about the divergence between gold and copper. I mean, that's really just because gold just keeps going up and copper had this drop, and was sort of just here. I like copper a lot. I think it kind of needs its reason. You kind of want Trump talking about the right things, and uh, he's distracted right now, so he's not really going to be talking infrastructure much. But I do think that there's a lot of charts there where you can start to accumulate. This look of this chart right now is accumulation to me. So there are stocks that will benefit from that down the line. So I'll just continue to watch flow. I mean, it looks like a higher low to me. I don't know. I don't know what your thoughts are on it.
I know we got a good entry there on
Yeah.
the ones that at least the ones I follow. So
Yep.
just looking for the recovery. I don't care the speed of it.
Yeah. Exactly. Um, Oil. I like oil. I mean, there's people out there saying oil's on the brink of this huge collapse. I just don't really see it on the flow I'm seeing. So, um, kind of more of the same here. I don't think you need some big explosive move up in these setups. Again, we say it over and over. It's just that stability of the price, and then the stocks kind of operate around that. They like the quiet chart isn't bad, and I do think that we'll get into some kind of zone here into the lower 70s, lower 60s to lower 70s, and we'll just bounce around there for a while.
I mean, I kind of just figured out. I mean, I had to hang out with you, so I had to learn oil. But the just kind of how to trade the charts, whether it's the Dinos or the BPs, or the world
Yeah.
versus the XOMs or whatever, or the cops. Little bigger ones are definitely slower. But yeah, he's got the charts. They're so owned that they're easily to find support in those charts from the share side. So that you just kind of got to wait for that. Um,
Yeah.
Oil's not going anywhere. And then there's obviously your miracle pullbacks and stuff like that. You just take advantage of those. So
Right. Oh yeah, absolutely. And the natural gas chart, kind of same story here. If it's going to park around 3 or 275 to 3 for a while, you're looking for that explosive move, 5 to 7. Because I think when it breaks into 5 to 7, it can just stay there for years. But just looking for that to happen. The combo stocks are better. Avoid leverage. Broken record on that note.
yeah, just jabs. Trying to time them right.
Yep.
Combo stocks, jabs. I like.
Um, China, very healthy to me, and I think you still just keep rotating into new names as they show up. And I do think that some of the TA is going to show up before the flow in some of those. So if I don't have flow on it, probably will in a week or two whenever you drop something in for China. I just think that's gonna continue. Already did well with some names here, but just looking for some new ones.
Yeah, man, I killed it on a few, but they just I'm with you on the trickle in part. Hasn't been a whole thing. I've looked for the whole thing, but it just hasn't really been there yet. But individual news is real good. China news is really good.
Yeah.
Slower moves too. P. I don't know. I don't know if people like even look at trading that way, but some people need a little slower move. They need a week or two to buy and then 2 weeks to take off. Some people like that. I don't know, but China's good for that kind of stuff. At the consolidation pop and then pops.
Yep. All right. Bitcoin out of the danger zone for now for hitting your number.
It ain't even to my number.
That's what I'm upset. That's what I'm saying. Like
no, 123. Sorry.
Well, no, not that number.
Oh, the down.
Oh,
yeah, that was just that was just pull out my ass number.
Yeah.
My big picture number 123 though
is the top for you.
Yeah.
Like we'll get there and reject again.
No, if you want to know my updated thesis, P, it's probably 119 and reject, and then and then back down to wherever we go from there. Maybe
I'm gonna stick to 132
on this move.
But I recognize
on this move here.
Yes.
I mean, okay.
Well, okay, so yeah, reject from 119 to where though? I mean,
just back in the zone, I would assume.
Okay.
I mean, you gotta let it happen, but I would just say back in the zone.
Okay. I'll stick to it, 132. But I recognize I need some kind of news for that to happen.
You're very similar here, right here to your scroll back there to like right before or right after June. No, June, bud. June. This year. Oh. Yeah, so you see how we popped up there on June on the J in June.
Uh-huh.
No, you're in July. No, I meant on the bottom where it says June. Sorry. Where in light.
Okay, here. All
right, yeah. So that pop, pull back.
Yeah.
That next high, that's where we're going, in my opinion. The next high. It's a little lower than the last highs. That's where I got the 119 from. Same chart shape. That's what I see.
Okay.
That was our pullback to 107 right there. And now we're going to go to where we're going to go, which is 119. Same shape, though. I just think we're going to get a tight consolidation like that for a while. Make sense?
I can see it.
Well, look, you have it there. Yeah. You have it there, and then you have it back where it says 2025, too. Same thing.
Yeah. Yeah, and I'll just just hit the pivots and trade the pivots while we do this. I'm fine with that.
the charts are good. Good job. That was one
There
my
is a
note. I said, Crypto reads in the junk. My crypto reads in the it's all shit has still been good. I mean, we hit Hive, BTIF timing was fucking perfect. Hive was fucking great, and then BTDR. I mean, I can't take credit for that. It was a combo play. But just when I posted them, we ain't talked about them a month. Search the group for them. There's like a 6 month gap in those names, and then I'm like,
yeah.
look at this chart, and what does it do? I mean, I'm not just looking at charts, people. So take that for what it's worth. But yeah, no, you got me into like the kind of like there's some range here. I mean, if you're seeing flow, I have to look at the sector, right? And I'm just going to use that.
Right.
So there, it's there. The couple names that we're about to have the conversation. We're about to
Yeah.
have that
Well, and
conversation.
I think the data center angle is something to keep in mind. Of who really is looking to get out of Bitcoin mining, and
Yeah.
why would they be looking to get out of Bitcoin mining if it's going to go to $1 million a coin? So that part of it is kind of in my mind, and the way Bitcoin is built, it gets harder and harder to be profitable mining it. So that I mean, even at 200,000, a couple years from now, you're still not making that much.
Did you
So,
see the energy chart thing? Like one of the
yes,
countries was like they could do it really cheap, and the rest of us were just paying out the ass.
yeah, and the disparity between like Iran and Italy
Is that
was
what
the
it
one I
was?
saw.
Yeah. Okay.
Yeah,
Yeah.
yeah.
This is an
Like
interesting
Italy,
angle.
I think it costs $500,000 now to mine a Bitcoin.
Hmm.
It's
Well, I mean, we
ridiculous.
could pull. You could put that with anything, though, right? I mean, you could pull
Yeah,
coal. You could pull cobalt out of somewhere or lithium out of the fucking ground somewhere, right? But it's just way easier to do in Africa.
yeah, right, right. No, very true. All right, so I'm gonna go over to Spy really quickly,
Let's do it.
and have my screen's giving everyone a little preview of what I'm gonna talk about next time. But anyway,
That's
um,
in the last five, you fucker.
all right. So the look on Spy here. First thing I would say is you still have a lot of dead open interest. So all that stuff at the top here is all done. The 475, 55, 80, 80. Forget all those. They're gone. But I the so the 525 for sorry 510 still, again, you're just too far out. The 640 is even on the edge of being done, but it's still around. So the 649.19, they might try to do something with that, but again, the story here is just dead open interest, and so a fresh setup needs to emerge after the 919 expiration. You might start to get that. You do have this, so the 585 March heavily sold, needs some kind of companion in the 640s for me to even have a read here. So that's basically the deal.
um, Before I comment, can you see the volume? Or was that all one buyer on that 640, or is that broke down? Is that
Let me see.
do you get that deep into that?
So I mean, it's pretty sustained.
Just sustained buying through the day.
Sustained
Okay.
activity, I
Golly.
guess. Yeah.
Okay. Okay. Um, the puts to me like that on that last screen that it's just all put side on your high IO
Yeah.
is still just positioned well. That's what I've been telling myself, and that's kind of been working. So I mean, I
Yeah.
think they have to change. I don't think they just hold. They're gonna keep doing what they've been doing, which is kind of letting it die and using it for what it's actually worth, which is hedging really big positions. Um, yeah, I mean, a pullback coming. I think it's still not gonna. I mean, if you've got to that, let's say 600 P. I mean, what does that change things for them over there? I just don't think it does.
No. I
And
mean,
that's
that's why
and
I
that's 10%. I mean,
yeah. Yes,
That's
and so that's why I mean I think that the realistic pullback number, um, to me, and it's just it goes up as the market goes up, but it's in the 630 area. Um, Really hard with until this flow changes, it's going to be hard to sustain anything below that, and so that's a good place to be. So so to me, a pullback into the 630s is a pretty big opportunity, and you just look for not necessarily SPY, but names affected by that. If Cat and John Deere want to just get drugged down with that move, then I might have a new pivot show up. I don't know. So we'll
well,
see.
you could. I don't. One of the things that bothers me with people, but it's really it only pops up occasionally. It's like when you eat at a restaurant and there's someone loud or something, right? It just happens occasionally. Um, is when something just runs like a mother, right? Like it runs, let's say it runs like 50, 60, 70%, and then it pulls back like 15. And it's like, did you not just see how far that ran?
Yeah,
The only reason I'm bringing that up is Spy kind of it's at a little risk of being in that kind of environment, which because I would much rather live in that. Let's just start there. Last week, me and you both were kind of 660. We're gonna even get there like in the next. I forget what we asked, and we were kind of like no, and we damn near got there this week. So it's just very
yeah,
hot. I would rather live in the 30 to 45 range for into October, get through a rate cut, and then get into the Q4 news and the guidance for 2026 because that usually lifts the market in its own way. That would be preferred. And just running hot, you're always at the risk of pullbacks, and I don't understand why people not only they don't see it that way, but then they assume that's bearish somehow. It's like stretching a rubber band out. It's
yeah.
got to come back a little bit. It's just you can't
Right.
keep stretching that shit.
Yeah, yeah. No, I'm I'm with you, and it's uh it's just a tough. It's such a this screen is a very tough read right now, and
Well, it
as
has
long as it's
been,
a tough
has
read,
been, yeah.
then we just continue.
Yeah, and that's been in our favor. So I would just say continue to
Yeah,
take advantage of the market. And I'll go back to like literally where I started this morning, P, is that capital preservation for me. And we're talking
right.
about the smaller ones or playing, the certain price stocks and then just having your sizing right, reasonable expectations. Thank you. When's my tea time? So,
Well, I mean, if you've had a good year, we're about to hit October,
yeah.
and then you know you hit Thanksgiving to Christmas, and then it's just things kind of dry up, and it's not really you don't really want to be as active that at that around that time anyway. So yeah, I mean, just get a piece of what's left this year, and um, don't overdo it.
Yeah, no, and if you like you said, if you are a little ahead, maybe it is time to
Yeah,
DCA a little bit into things you do believe in or want to hold longer term. And I'm always up
yeah,
for
and
that
then
conversation. Always up for that conversation because it's just about buying stuff undervalued in that regard. Yeah, hit QQQ for me.
so the SQQQ, you can see 919 is pretty big day as far as open interest goes. So you're gonna get a lot of this stuff off the books. A lot of these still have a chance. I mean, the 18 Cs and um, 19 Cs and all that. I mean, you could see the OI wake up there and little pop to 1950 something like that. But there's no big picture in this area yet. Um, it's all no one's sticking their neck out very much. So no, not much here either, and that's just indicative of that we continue. And I would just encourage people ask me about SQQQ on green days, not red ones. Like, hey, should I buy this? After we pull back for a few days, that's the worst time to buy it. So anyway, but yeah, not
S
much here either.
SQQ down 46% year to date, up 100% on the year. Trade the range. Um,
Yeah.
let's talk because we normally just talk it out live or as it happens, but let's get a little maybe 1 or 2 minutes before we call this a day and on the rate cut 25 or 50 for you.
25, I think.
Yeah, I'm with you on that. And I just kind of said, you know, set the like lobbed up the little softball there, but the market like a little overextended. It kind of just gonna. I think we'll have a bad day or two, um, but the rotation should come in hot and heavy onto those people that are affected positively by the rates that can refinance some debt or that to housing and stuff like that.
Yes. No, I think I would just say pout, not panic. I think the market's going to pout, but it's not going to panic on what's going to happen this week.
Yeah, and I mean you already said 6:30. I'm right there with you. So
Yeah.
um, yeah, be ready, people. All right, you ready to work, sir?
Yeah. Let's
Perfect.
do it.
Like and subscribe. Link somewhere, people.